In this video, I'm going to teach you everything you need to know to build a trading account with less than $10,000. I'm going to show you how much position size to use, the exact stocks to trade, and the exact strategies I've used to make over $1.7 million trading with proof, as you may have seen in my previous videos. Now, if we don't know each other yet, my name is Jay Dunn Trades. I'm the founder of Team Bull Trading, and I love seeing small accounts win. I started trading years ago with just $5,000 in a dream. Now, I know you see 1.7 million plus, you see the big days, but what you don't see is the years of grind it took to get here. Years of failing, years of focusing, years of trial and error. And so when I teach these small account lessons, I'm very passionate about it. I've been that losing trader. I've been that frustrating trader. I've been that trader buying courses of people trying to sell me some crap secret strategy that doesn't work. So a few things you can always count on here is transparency, passion, and education that will help you win if you stick to it and follow the long-term vision. Now, making money trading is hard. I think everyone who's tried it knows that. But making money long-term trading requires a set of rules, so that's what we're going to go over first. Building a small account is hard, but it's not impossible, and with the right rules and education, you can do it and you can be very successful with it. So number one, start with less than $10,000, even if you have more. I don't care if you have $100,000. I don't care if you have $1 million. You need to start with less than $10,000. I typically recommend $2,000 to $5,000 to start. That's where I did. And that's where I see most of my students have the most success. Why? Why not use $50,000 if you have $50,000? Because you don't know what you're doing and you will more than likely lose it. If not the first month, if not the second, then surely the third, fourth, or fifth, you will end up losing it. So that's step one. Start with realistic expectations. It's hard. Making money long-term trading is extremely hard and something that you have to put full focus in. Now, number two, stick to a basket of 3 to 5 stocks. I will be covering the best ones for you later on, giving you the ones to trade, the ones that are beginner friendly, and the ones that you need to stay far, far away from, my friends. Number three, establish a simple system you will be trading with and guidelines to enter each trade. This is something that a lot of students struggle with. This is probably one of the biggest problems I see traders have. This is something I fully focus on in our mastermind program and something that we'll be focusing on today and giving you the key foundational pieces to building your system. Now, number four, create your daily, weekly, and monthly plan for trading and account growth success. Now, that does not mean making a daily goal. Here at Team Bull, we teach the right way to trade, and that does not include I need to make $100 a day. I need to make $300 a day. By doing that, you will be trading with emotion and not trading the way we're teaching you with a system, okay? We trade off principle, process over profits. So I want you guys making a daily plan. I will enter each trade with 2 confirmations. I will enter each trade with the plan I made myself prior. This week, I will follow my plan. Maybe you have a weekly goal, but your trading isn't contingent on hitting that said number, okay? And then monthly, I will follow my plan all month. I'll keep my red days to a minimum, et cetera. We'll go over more of that later. Then finally, apply 3 important psychology tips to your trading to boost your confidence and increase success rate. We'll be going over those as we go through this lesson and when we get to the charts where I show you my favorite setup and exactly how you can execute it. Now that we have our rules in place, it's time to go over our roadmap and what to expect each month. Now, I want to add this too. I mentioned a $10,000 account, but everything we're going to be going over with position sizing, with stocks to trade, with this whole plan I'm giving you, even the setups, is applicable to a $1,000 account, a $2,000 account, a $5,000 account, or for anyone looking to learn. Now, I mapped out these 6 different pillars of success. Now, we are making this video right now in June. However, if you're watching this later, if you're watching it in July or August, September, just start your journey from right here. Start it from the top. I put foundation first because no matter if you've been trading for a month or 2 or, a few months, whatever, you likely don't have as strong of a foundation as you need. So we're going to restart here. I want you going back to the basics. What is a candlestick? What's a chart pattern? What is price action? What's level 2? What is supply and demand? What are support and resistance? All these things, okay? For the first 2 months, I want you building a solid foundation. I don't want you even thinking about money, okay? I want you watching the market every day. I want you attending open every day. I want you taking notes every day, but I want your sole focus on getting your foundation built like you're building a house. You don't go and build your master bedroom and your beautiful, waterfall shower first. You build the foundation, baby, brick by brick. Number 2, the second 2 months after July, right? Kind of towards August, we're going to go into system testing. One contract at a time. I want you trying a few different things with what you learn from this YouTube channel. If you're a member of our mastermind, I want you applying what you learn there. And I want you really diving in to just trying different things with little to no risk, okay? That process goes a few months as well. Then to system application. On system application, I want you taking what you've done in system testing and trial and error, and I want you slowly, keyword slowly, adding more size, applying your system, right? Seeing what works and what doesn't, and slowly building it to be tailored to yourself. Now after that, we're about 6 months in. With our 6-month checkup, I want you to look at all your notes, look at your daily journal, look at your P&L from the first 6 months. Now, I don't want you to get discouraged if you're red. It's very normal to be red your first 6 months, your first year, maybe even your first 2 years, first 3 years. But I want your checkup to be more focused on, am I following my plan? Am I following what I told myself I was going to do in this foundation phase? So after that, we go on to the brick by brick remodel. We look at what we've done in the 6-month checkup, right? What did we do right? What did we do wrong these last 6 months? Then we go and we take out the bad bricks, the ones that are loose, the ones that don't have the right setting, and we put in the new, stronger bricks for our long-term foundation and our long-term trading. And then finally, at the end of the year, we get to our repetition phase. At this point, if you've been applying yourself every day, if you've been grinding every day, you likely have a good idea of what it's going to take to win or what you need to do. If you've learned the right strategies, if you've been applying, if you've learned, how to read candlesticks the proper way, then we're in the repetition phase, and you over and over attend open. Take your notes every day. Look at what you're doing right, what you're doing wrong. If you start struggling a little, size down, get right back to the books. That's the key to making it long-term trading and following this roadmap. If you want to build this $10,000 account, I don't like to say in the next 6 months or year, because then that puts the focus on money, and that's not what we do here. You're going to need to do all this to a T, right? It's going to be extremely critical to your success. Now, with our roadmap comes some very specific position sizing things we need to talk about. And on this next chart I made for you guys, I need you guys to take notes on it, screenshot it, and apply it, because it is going to be vital to your trading success. This, my friends, this is the guide I need you guys taking notes on, screenshotting, and taking very, very seriously. Now, I put these all together for you all. $1,000 account, $2,000 account, $5,000, and $10,000. So let's go ahead and start on our $1,000 account. If you have a $1,000 account, the max position size, the max money I want you putting towards any options position is $200. Absolute max, 20% of your account. Now, that doesn't mean that's your max risk. Your max risk, not your max capital allocation, is $80 to $100. Now, the reason I put that a little higher, you're going to notice on these bottom ones, the max risk or max stop is around like 5% of the account. I put it a little higher on a $1,000 account because in reality, it's just hard. And no one's going to tell you that. They'll say, come join my Discord. I'll help you turn $1,000 into $100 million. And it's such crap. It's just so not true. If you're building a $1,000 account, you have to have sniper precision. It's going to be really hard. You might take a little bigger losses sometimes because you have to give yourself that wiggle room to potentially hit those bigger winners to grow that small number. And that's the reality of trading. So your max stop or max risk on that is going to be $80 to $100, no more than that. I want you guys using weeklies or with at the money strikes. Then your contract price is going to be 50 cents to $1, meaning $50 to $100 a contract. Okay? $2,000 account. Max position size, $400. Max stop, $100 to $150. Once you're doing weeklies again with at the money strikes, and your contract price is going to be $100 to $150, $1 to $1.50 a contract, okay? $5,000 account, same deal. $1,000 max position size, $250 to $300 stop loss, weekly options with $1 to $250 per contract. Now you'll notice on these last few, I put $1 for the bottom again. If you find a contract for 80 cents, 70 cents, you're trading, next days or weeklies, whatever it is on SPY, you can do that. But I want you guys sticking in this range no matter how fast you grow this $2,000 or $5,000, because if you size up too fast, if you turn this $2,000 into $8,000 and you start thinking these numbers increase, you're going right back down to $1,000. you're going right back down to 2,000. And I don't want that for you guys, fam. I want to see you guys win, but it takes precision. It takes knowing what to do and specifically what not to do. So then a $10,000 account, max position size 2,000, max stop $500 to $600, weekly options used, and $1 to $3 a contract. Okay, max 300. Now, honestly, I trade with a lot of money now. I start every year with around $200,000. I still don't like trading contracts above $300 a piece. Still to this day, 7 years later. So as you guys, all blooming, all getting ready to grow your accounts, I want you guys using this guide, taking it very seriously, and realizing just because you grow from 1,000 to 2,000 or 2,000 to 5,000 or 5,000 to 10,000, that doesn't guarantee you stay there. You can go right back from $10,000 to $1,000 real quick if you don't follow the rules I'm going to teach you and all of these guidelines I've give you here. Now, we have our position sizing, we have our rules, but we're going to need some strategy to go make ourselves some money and build this small account. So here I have the 3 pillars of strategy you're going to have to know if you want to make consistent money. Now, we're going to go to the charts in just a second, but it's crucial to understand what we're going to be looking at beforehand so you don't get confused and you have a better understanding and more confidence going into your trades and what we're going to be learning. Number 1 is supply and demand. Supply and demand is going to help you identify your zones. It's going to tell you when to and when not to trade. And finally, it's going to give you better chances of winning, and not just that. It's going to give you a better chance of finding the bigger winning moves, which is key to building that small account. 2, support and resistance. Support and resistance is similar to supply and demand, but it's going to help us identify the key levels, not just the zones, right? It's going to give us a better idea of when to enter and when not to trade instead of just having these wide zones. And it's critical to know there is traders, including myself, that make 6, 7, and 8 figures just knowing how to trade support and resistance. No secret indicators, no algos, strictly knowing how to combine these two together, keep their trading simple, and make money. And of course, that goes without saying, we got to add price action in there too. This is going to be the pillar to your trading success. The best multi-million-dollar traders I know, I talk to on a routine basis, all trade price action as their core strategy. This will allow you to read what the market is telling you in real time, and it's going to give you the art. It's going to teach you the art. You're going to be the Van Gogh of trading. It's going to give you the art of learning to interpret and execute on candlesticks and volume and not have to rely on anything else besides what you are seeing. And that, my friends, is a special, special feeling, and so good knowing the longevity of your trading will not be tested no matter what the market does. Now, before we keep this money train moving forward, I wanted to give you a quick visual of what we were just talking about. So between supply and demand, demand is going to be where we come down, and you see on this chart right here I made for you, every time we touch this green zone, we bounce back up. This is on a weekly time frame. However, when we come to this red zone up here, we typically sell off. This is your demand. This is your supply. Now, key to note too, when we come back down to demand, if we don't bounce back up and we fail it, that demand now becomes supply. Now, the only difference between this and support and resistance is support and resistance are the key levels. So this is the zone. However, right here, this 220 right here, this would have been our support, that exact level. Up here, this 300 level, that would have been our resistance. This 300 zone is supply, 300 is the resistance. This 220 zone, right, is demand, but this 220 level, is support. That's key to know. And whenever they flip, they become each other. More on that later. Now, before we head over to the charts to see exactly how you're going to build that small account up, you got to know which stocks to look at and which stocks to trade. I made this list for you just for that. On the left here, we have some ones we want to start with. SPY, QQQ, Apple, AMD, Amazon, and anything with liquid contracts less than $3 a piece or $300 a contract. I've had a lot of success with these. My students have had a lot of success with these. And they're overall very good for building a base and putting in your basket of stocks that you learn the personality of. That's very, very important. Now on the flip side, some not so small account friendly stocks. Tesla, Nvidia, Netflix, or anything with illiquid contracts or contracts that are more than $3 a piece or $300 or more. I personally still to this day do not like trading contracts that are over $300 7 years later. Just not my style. I like sticking to what I know. I like sticking to what I've learned the personalities of, what fits my risk management, and all of the above. So for you, I recommend you stick to these. Anything that has premiums within that like 50 cents, $1, $1.50 range, under $3 like we talked about before, and stay away from the high spread stocks and the very volatile movers such as these. Now, in addition to all the things we should do, all the things I'm going to teach you in the rest of this video, and I've already taught you, there's a list of what not to do, my friends. What not to do. And this will be make or break for you when you're trading. Now, something I've told thousands of my students, a phrase I tell a lot of my friends: discipline over dopamine. If you want to become a successful trader, if you want to build successful businesses, if you want to have a successful relationship, whatever it is, you have to focus on the discipline to do what's right. Do what you know you need to do, even if it's not the easiest in the moment. Discipline over dopamine. On trading terms, never average down. You have a losing trade and it goes even lower, you're in the red, you don't add more just to have it cheaper to potentially get out, break even, or have it go less up and make money. No more of that. That's a recipe for blowing your account and no more trading for you. Never boredom trade. I don't want you sitting there trading just to do something, just to feel something, just to click a button, just to post a profit pick on Instagram. None of that. We're done with that. Never revenge trade. At Team Bull, we pride ourselves on being the best losers. What I mean by that is if you are losing a trade, if you're losing in trading, we want you losing small, and I want your winners bigger. There's going to be losses in trading. You're going to lose trades. But in reality, you should embrace that. I'm going to learn from that, and I'm going to have better and bigger winners. That's how you're going to make money long term. Never embrace a gambling mindset. I don't care what the time frame is. You will eventually lose if you're going into this gambling, just guessing which way things are going to go. You have to have an edge. You have to have an edge. Never feel like you have to trade every day. You don't. If your setup comes, great. If it comes 3 times, great. Take 3 trades in a day. But if it doesn't come, you do not have to trade every day. The best traders in the world don't. Quality over quantity. Never go a day without journaling. I remember in my first few years of trading, every single day, like clockwork, I was in my notepad, pen to paper, journaling my trades. What I did right, what I did wrong, my emotions for the day, anything I could think of. And still to this day, I do a lot in pen and paper. Holds you accountable. Highly recommend. Never go a day without a game plan. Just like I do every day with our Team Bull trading community, with our Discord, with our mastermind team, and with our students on our Instagram Live every morning. If you're trading with Jay Dunn, you're coming into the day with a solid game plan. That's the Team Bull way. Finally, never enter a trade without at least 2 confirmations. Critical. Whether it's volume and price action, whether it's a macro level and an intraday level, whether it's an indicator and a level, whatever it is, you need at least 2 confirmations to take your trade. No more seeing one thing and taking it. You guys got to respect your money more than that. So if you're trading with Team Bull, if you're learning from this video, stick with these what not to do's. Don't do them. Focus on what you should do. Don't do what you shouldn't do. Let's go to the charts to see exactly how we're going to build that small account and do a big one. Let's go. What I'm about to show and teach you is going to change how you look at charts and how you trade forever. It's helped me make almost $2 million trading with proof. It's helped our mastermind students and Team Bull students, such as Big Pete, go from making $300 to $500 a day to $15,000 on the 2nd of June. It's helped mastermind students like Giuliani pass their eval, and hundreds of other students inside Team Bull find value, start making money, and change their trading around. So with this, I brought an example to mind here. Something that we traded in Team Bull, and a very good learning curve of exactly what I look for, a setup that you can take, and something that has been my bread and butter for years. So here we have the SPY 5-minute chart. Now you'll notice, let's mark some lines out together. When we're looking at the chart going into the day, building that small account, we need to know our key areas of confluence. So you can clearly see here, this was a resistance, turn back to support or demand area, right? Back to resistance. Now looking at this intraday, we go here. You can clearly see we're rejecting this 418 over and over. Now, a lot of beginner traders think this. They think, okay, well, I'll just, draw this trend line out, and then I'll draw this, and then if we break this, I'll enter here, and if we break this, I'll enter here. That's not how we trade anymore, fam. We look at what these candlesticks are telling us and what this volume is telling us. So how we trade now, we're looking at this, and we say, okay, even if we like the break up here, even if we like this break above, or even let's say we're watching this trend line or we're watching whatever and you want to enter puts below 417.5. This is not the setup we're going to take. You need more than one confirmation. this isn't going to give it. But something that you can do is this, and what's helped me a lot is this. You let the pattern play out. You let the price action do what it's going to do. We finally break out of this range. We didn't break to the upside. We finally break below this low point of the day right here. This is where I get interested. If you didn't take any puts up here, which there would have been no indication to do so, this is where I get interested. We break down. Now, as traders, I want you guys looking at this on the 5-minute chart and the 2-minute chart. We slowly make our way back up. Our volume is decreasing. Decreasing volume, moving on back up. In what trend? A downtrend. So now at this point, we're coming back up to that cheaper entry. We have one confirmation here in that we come up. We have this previous support. Turn now to resistance. Second confirmation, we're going up on lowering volume. That's a whole nother lesson on volume price analysis I'll have to go over. If you're in our Team Bull community, I had Anna Cooling, author of Volume Price Analysis, come in and do a guest speaking for us. You'll see this here in our Welcome to Guest Speakers in Education. We have all kinds of education in the community. Jerry Tendler, Umar Ashraf webinar, who made over $15 million trading, all exclusive to Team Bull. And we go over that in depth. We have that second confirmation there. And then third, if you can get a third confirmation, you are in a very good spot to make money long term. We go here. We pull up our Fibonacci tool. Now, when you're using Fibonacci, this is one of the best things I can recommend to you as a small account, or any account really. You look for the trend. So here we have the high a day, and here or swing high and then swing low. Okay? So whenever we come back up to this golden zone, I call it the golden pocket. We come back up to this golden zone and we touch here. A lot of times in the trend, this is where the reversal will be and we'll reject back down. So we have this 417 level. Number one, support, turn, resistance. Going up on lower volume. Second confirmation. And then third, we're meeting up with our 50% retracement. 3 tic-tac-toe, 3 confirmations in a row. We're going to enter here. You enter puts here. Even with a small position, you're getting well over 100% return on this move down. Well over. Now, let's say the trade didn't go in our favor, because that's the key. I want you guys learning how to mitigate your losses. I want you guys learning how to have smaller losses. So on this trade, we look at this. If we enter right here, let's say you don't get the top entry, enter right here. You have this candle down. Your next stop will be over 417, a 5-minute close above, or 10 to 20 cents above this, to give it just a tiny bit of wiggle room. You can even go as high as this previous wick on this candle right here, 417.15. So you set your stop here. We have about 20, 30 cents of risk with a potential $1, $2, $3 move down. And that's the key. You got to focus on your R multiple, your risk reward. If we have 20, 30 cents worth of risk, we need to make sure our final runners are being sold at 3R, at 4R, at 5R. And it's setups like this that are going to make us our money long term, guys. With your trading, okay? And you know what? Let's do this before we go on too. We missed this setup, but we're watching it still go down. Something you can do then too, right, is you can look at this. We made this low here at 416, went up, had a little dip below it. We came up, failed to go higher, failed to go higher. This is something you can look at too. You can tell clearly by this volume that this move is not strong. And we continue on down. This would have been an entry for you as well with a stop above this high wick. Or again, your 20, 30%, whichever route you take with your trading. There's plenty of entries to be had here. Now, this is kind of interesting too. We get down to this 414. Do we have any key levels here? 414.38 we did. Our next level down was like 413. But we build this base right here. And as a small account, I don't want you chasing this on the day. I don't want you guys trading this last hour. And that's a good point too. I want you guys trading the first 2 hours. First 2 hours of the day and the last hour of the day. Now, sometimes you'll get a decent setup. I'm a few hours in. That's okay. If you're a new beginner and you have all day to trade, this is a perfect time. This is when it would be okay. Otherwise, I don't want you guys constantly sitting around all day, every day, trying to catch trades when in reality, a lot of times it looks like this. It looks like this. And knowing when not to trade. Not trading the chop is a skill just like knowing when to trade is. Okay? So that's extremely key for us as developing traders, all right? I want you guys fully acknowledging that. I want you guys going full force with it. And if you just embrace simple stuff like this, right? Knowing how to read volume. Knowing, okay, why was this a reversal candlestick? Well, we have this huge candle with volume here, and the smaller volume with this smaller candlestick with bigger volume and this wick up, key sign of reversal. Key signs of reversal across the board in this volume. You just have to know how to read them. So hopefully with this channel, it will help you. Again, the 3 pillars of your success for psychology are going to be KISS, keep it simple, stupid, discipline over dopamine, and the 3 C's: confidence, conviction, and comparison. We need confidence. We need conviction in our trading, but I don't want you comparing yourself to others. That is the key. Use price action. Stick to 2 to 3 confirmations. Okay, go over all the rules we went before. Don't try to force trades in the middle of the day. And finally, tap in with us here in Team Bull. We love seeing you learn. We love seeing you win. If you want to apply to our next mastermind, the link is below. Make sure you guys hit that subscribe button if you want more and more free education. And of course, we trade live every single day in our Team Bull Discord. We'd love to have you in to learn with us. We'd love to see you level up your trading. So with that, that'll wrap us up. If you want more videos just like this, if you want round 2, leave a comment below, spam it, blow it up. Let me know you want it, and we'll make something tailored just to you. God bless. I love you guys. Peace.